How's it going, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. We're releasing this video right before pre-market so you can have the best options strategy going into the market next week. This video, we're going to be covering AMC options, which contracts you should buy, because there are some recommended ones that you should be looking out for. So don't just choose any kind of strikes, expiration dates. Choose the ones that basically look the best. So we're going to do this by taking a look at the options summary. So overall, there's more calls being bought than puts, which is a good sign. So the overall flow is going to be a little bit bullish. So if we go to the options, the historical premiums, this is good news. So premiums are going to be a little bit low due to this pretty big sell-off on Friday as well as Thursday. Premiums have been decreasing, so this means that you can get into AMC call options at a pretty low price. Now, it's still going to be a bit high because implied volatility is still going to be around 300%. 400%, so option premiums are going to be a bit high, but it's not as high as it was earlier in the beginning of the week last week. So let's take a look at the dominant expirations as well as the dominant strikes. We can see most people are buying the calls for the end of the week, next week, June 11th. So this is going to be a weekly. It's going to be a bit risky. So if you're looking to buy a lottery ticket, this might be the one want to buy, but my recommendation would be this June 18th expiration date. Still has a ton of volume, and a lot of people are buying that as well. That is what I would recommend to put your money in. And if we look at the strikes, the $50 strikes is going to be the most popular, followed by the $60 strike. So you can't go wrong buying the $50 or $60 call strikes expiring either next week if you're a bit risky, or the June 18th if you want to be a little bit safer. Now, buying calls on AMC is going to be risky regardless, but this is going to reduce your risk even more. So a lot of people are also buying the 145 straight calls, and this is going to be an interesting one because this is the furthest out of the money call that you can buy on AMC, and there's a lot of volume on it actually. So if you want to buy a cheap lottery ticket, a 145 strike call is going to be the one you want to buy because it's going to cost the least amount of premium, but it's also going to be the most risky because you're most likely going to lose all your money on it. AMC has to basically triple in price for you to make money on that call, especially if it's expiring in June 11th. So June 18th is the recommended expiration date, and we can see that we're going to take a look at the $50 call. The open interest and volume are pretty high. They're in the thousands compared to something like the $51 call. It still has pretty high volume and open interest, but not as much as the $50 one. And we want the $50 one because it has high liquidity, meaning since contracts are being traded left and right, you can get in and out of your position pretty quickly since a lot of people are going to be checking out this $50 strikes. Same with the $60 calls. The volume is going to be very high as well. We can see 8,000 with 15,000 open interest. So this is another great one. And it is going to be kind of expensive at $1,270 because implied volatility is still pretty high, even though it has been reduced in the past few days. So the premiums are going to be a bit high, but the good news is there's going to be high volume to get in and out quickly. You want good fill times, and that's going to be the $50 and $60 strikes. So let's take a look at the $145 strike. This is going to be very risky. A lot of people are buying it compared to the 140. So a lot of people don't have that much money, and this is the cheapest way for people with small accounts to get into AMC. So if you have a smaller account, this might be the play for you. The 145 strike, we can see volume is 32,000, which is a lot. A lot of people are buying and selling these contracts at the 145 out the money AMC calls. So it is going to be very, very risky. You're going to be betting on the short squeeze, causing AMC to go absolutely to the moon, which it very well could because the shorts have not yet covered and there could be a massive short squeeze in the next week or so. So buying it 3 weeks out is going to be a little bit safer than the weeklies. So we're going to have a lot of volume on this 145 strike calls. That's pretty good because we're going to be able to get in and out quickly, and we won't get stuck with having our order not being filled. So that's going to be our plays for AMC. I would recommend the $60 or $50 strike calls, but if you can't afford that, a 145 strike call would be pretty good as well. And if you want to be a bit on the safer side, you have a bigger account, cash secured puts would be a good play to make. As we can see, the premiums are pretty high in the puts. You can go pretty far down in strike prices. Something like a $25 strike put would yield you $245 at premium. You sell 4 of these, you're going to be making almost $1,000, which is a 10% return in just 2 to 3 weeks on your money, and it's a very safe bet. You have a 75% chance of winning, and as long as AMC stays above $25, you're going to be making $250 of credit per cash secured put that you sell. I personally will probably be selling the $25 strike puts. I love cash secured puts. It's my favorite strategy, my favorite option strategy. It's very profitable. It's a very safe strategy, but you don't make as much money as you would gambling on calls. So my account is a little bit bigger, so I'm going to be playing these safer options strategies. So this is about it for this video. Gave you 2 types of option strategies, either buying these $50, $60 strike calls or selling some cash secured puts. Whatever strike price you're comfortable with. It doesn't really matter too much which strike you choose, just whatever you're comfortable with, holding 100 shares. And you don't want AMC to drop below these strike prices that you choose. But if this video helps in any way, please leave a like. I'm trying to get this video out as quick as possible before the market opens, so you can determine what kind of strategy you want on AMC. And also check out our BlackBerry video option strategy that I released 1 to 2 days ago. If you want to play BlackBerry as well, these stocks are going to be very volatile, so keep your eyes on them. But that's about it for this video. Thanks for watching.